It's Thursday, the 19th of December, 2024. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories, 5 minutes. Let's go. Story number 1, the federal budget is expected to be in deficit for at least a decade, with a $22 billion worsening over the next 4 years due to recent spending decisions.
That's the bottom line of the mid-year economic and fiscal outlook released yesterday by Federal Treasurer Jim Chalmers. The underlying deficit this financial year is due to come in at $27 billion, slightly better than the May forecast of $28 billion, but then worsen for the next 3 years. Over the next 4 years, the combined deficit, $144 billion, money we have to pay back. Government spending as a percent of GDP will surge next financial year and then fall back. Off-balance sheet items don't show up in the underlying budget balance that I've been talking about. My info suggests there will be $90 billion of those over the next 4 years. If you put that into the bottom line, which they call the headline budget deficit, well, that means that $27 billion for this financial year goes to $48 billion. Why is there a difference? Well, they're actually investments, not costs. Stuff like the National Broadband Network, modernisation of the energy grid, but we still have to pay for them. There's also more than $5 billion allocated that hasn't been announced yet. Think election promises.
Okay, so that's the balance sheet side of the economy. What other gems were in my EFO this year, Sean?
In terms of the economy, the government has downgraded its growth forecast this financial year to 1.75%, then 2.25% in the next few years. It's forecasting ongoing easing of inflation and wage increases, a steady pickup in the unemployment rate to 4.5%. Net migration is forecast to be 340,000 this year. That's about 80,000 more than forecast in the May budget. That'll put the government under pressure in relation to the housing market. Another interesting one, the government wants to axe R&D tax concessions for tobacco and gambling companies.
Okay, moving on to story number 2 now, Sean, and the ASX is on track to end the year with fewer listed companies than it started with, as more companies opt to go private.
The total number of listings has fallen from 2,191 at the start of the year to 2,121, according to global investment firm EQT. That's a net loss of 70 listings. There were 30 new listings on the ASX this year compared to 64 delistings. The decline in the number of listings continues at a multi-year contraction for the Australian share market and shows the ongoing appeal of private markets, also the ongoing appeal of Wall Street. The trend is driven by companies choosing to stay private longer or opting to delist. Perpetual's battle to sell 2 of its 3 businesses to KKR, and Top Shelf International courting buyers are among 2 deals that hang in the balance at the moment.
Story number 3, National Australia Bank boss Andrew Irvine says the Australian economy is in reasonable shape, with the outlook improving for small businesses and jobs. That's good news, Sean.
It is. NAB held its annual general meeting yesterday. It's the largest lender to SMEs. Mr. Irvine said the bank will continue to advocate for the sector as it faces many challenges. The newly appointed CEO said the bank is optimistic despite headwinds around international and domestic challenges. He expects to see interest rates fall in the first half of next year, but also realises many customers are finding it tough right now. He said the bank is working to protect its customers and itself from criminals. In the past year, customers abandoned more than $170 million of potential scam payments as a result of payment alerts. Customer losses from scams were down 20% last financial year compared to the previous one. Pretty good, I reckon.
Yeah, not too bad at all. Story number 4, Sean. Speaking of not too bad, this actually kind of goes the other way. The Aussie dollar not having a great time at the moment. It hit its lowest level this year yesterday.
Yes, it fell to 63.35 US cents. The weakness in the currency all year has reflected 2 things. 1, slow growth in China. Lower demand for Australian iron ore, lower demand, then Chinese buyers need fewer Aussie dollars. 2, the US dollar has been strong and we've really felt it. When you measure the Aussie dollar against other currencies, which is important for those heading overseas over this Christmas period, it's a mixed picture. Against the yen, the Aussie is reasonably strong. That's why so many people are going skiing in Japan over the next couple of months. Against the euro, relatively weak, making trips to that region more expensive.
Last one, Sean, story number 5. You mentioned Japan there. Nissan and Honda are in exploratory talks about a merger of the 2 car makers that would create a $52 billion Japanese giant.
The two companies are considering a way to combine that would help them better compete at a time when traditional car makers are grappling with fast-growing Chinese electric vehicle manufacturers, according to a report in the Financial Times. The talks between Nissan and Honda are at an early stage, and there are concerns about a possible political backlash in Japan because a merger may mean job losses. Nissan and Honda announced in March that they'd team up to develop EVs and have deepened their talks amid uncertainty about what Donald Trump's return as US president will mean for the car industry. Their share prices have been really poor. This year, shares in Nissan have fallen 40%, meaning it's worth about $8 billion as a company. Honda's share price has also fallen. It's $44 billion value as a company. The combined company would rank as the world's third largest car maker in terms of volumes, not value, but volumes, behind Toyota and Volkswagen.
All right, there we go. The top 5 business stories in 5 minutes. Thank you very much, Sean.
Thank you, Michael.
It is Thursday, the 19th of December, 2024. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed, wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 business news by Fear and Greed. Have a great day.